Hey, everybody. Thank you, and welcome back to the next episode as we go into 6 months and 1 week of 62 Who Knew. And we are bringing back one of our national sponsors, but also the people that hold the record for the most viewers each. And that's because the topic is nothing short of staggering. It's nothing short of market disruption. It can literally change the way people view financial planning in this country and the purchase of certain products. It also can bring products to mass America who otherwise thought they maybe couldn't afford it or didn't have the liquidity to pay for it. But you do. And you do thanks to Cornerstone Financial and their products, CHEIFS, which is converting home equity into financial services. So I'm going to do a brief, very brief introduction because these two men are familiar to our audience. They're familiar to me. In the middle right now, is the audience seeing the same thing I see? In the middle is Mr. Craig Korn, founder, CEO, and managing member, and a very good friend and trusted friend and mentor of mine. He was a seasoned leader in the reverse mortgage industry for more years or decades than he cares to admit, and has created Cornerstone Financial LLC. And his background is staggering. Rather than me just go over it, Google him, because his background is staggering. We're going to leave it at that. His partner and also managing partner, Mr. Daniel Anderson, with more decades in the insurance industry, that he wants to admit as well, as far as forming companies, being president of companies, selling large companies. Again, a reputation in the insurance world of integrity and knowledge that is beyond reproach. And these two friends got together, looked at each other and said, you know, there's just not this, something's missing. Something's missing from mass America. Reverse mortgages certainly didn't fill the gap. And quite frankly, there's not an insurance product out there that fills the gap of CHEIFS. And I'm going to let them tell the story. But you worked on this for quite some time before you came to market. But welcome back, Craig and Dan.
So I don't know how we're going to do this, Craig. Last time we did this, we were in the same room. So audience, we are now in two separate rooms. So
they've grown. The office is now twice the size. Yeah.
Yep. So Michael, thank you so much for that lovely introduction. It's actually better the second time than it was the first time. So hopefully the third time, if we get an opportunity, will be even better.
Yes,
So,
I will.
hello, audience. My name is Dan Anderson. My partner, Craig Korn. I'll let him introduce himself after I finish speaking because, as I said, we're going in alphabetical order. As Michael said, I've been in the insurance distribution business for, believe it or not, 40 years. And Craig and I have known each other for 30 of those 40 years and would routinely see each other at a holiday event that a friend would host or sponsor. And it was 2-3 years ago. At the same meeting or at the same venue, we always get together. We meet each other. Hey, what are you doing? What are you doing? Hey, let's get together. Long story short, we had lunch. Craig had an idea. And coming out of the reverse space, which he candidly didn't enjoy, he thought there was a better path and a better product and a better opportunity for consumers. Had an idea about, using home equity to improve lifestyles. And that was the genesis of the conversation. And with my insurance background, educated Craig on commercial premium finance, which is a tool designed and used by wealthy individuals to finance life insurance and allow their AUM to stay in place, to continue to grow. And out of that conversation came a pretty novel concept. And that's basically what CHEIFS is today. We're literally selling a fraction of your home, using those proceeds to improve lifestyles. So we went on the road. We literally spent a year on the road to vet out and really make sure that we were onto something. And we met with insurance carriers, reinsurers, regulators, private equity, lawyers, accountants, attorneys, you name it. Mike Banner, you were an early individual. We floated this idea up and we heard a resounding, you guys are onto something here. If you could truly pull this off and execute where you could literally buy a percentage of somebody's home, turn that to cash and allow that individual to stay in their home, to age in place and use those proceeds to improve a lifestyle, is a game changer. So Craig, I'm going to turn it over to you now. And I think you might want to share with this audience the opportunity and the scale and what we're doing.
Yeah, Dan, listen, thanks for that nice intro. And Mike, as always, thanks for your very kind words. So there's a couple of things that happened as Dan and I were going through this journey of trying to transform the way individuals and advisors think about optimizing home equity, buying and selling insurance and investment products. And Dan shared with me a lot of things about, the insurance distribution world that resonated very deeply. Despite the fact that I'm an old guy, I can still learn a few tricks. And I think we can all agree to that. And, Dan shared with me that in 2024, $450 billion of new life insurance, long-term care, and annuity premiums were originated in this country. So that's new production. And if you think about it for a second, that means advisors had to ask their clients to find $450 billion, which could come out of their bank account or it could come out of their investment portfolio. And for those who are very, very wealthy, Dan mentioned traditional premium financing before. So think about that for 1 second. Advisors had to ask their clients to withdraw upwards of $450 billion out of their bank account. That makes homeowners and clients less liquid. Therefore, they feel less safe. That's a fact. Secondly, they had to ask their clients to go to their financial advisor and have them liquidate upwards of $450 billion of investment portfolios. Well, what does that mean? There's tax implications. There's also all the opportunity costs going forward. And I'd be remiss if I didn't say, I'm sure if financial advisors don't like the idea of having their compensation go out the door to purchase insurance products.
A very sensitive topic in that industry.
Well, Mike, we know this because we've seen firsthand insurance advisors and financial advisors look at each other and say, hold on, we know we need to buy important insurance products for our mutual client, but we also know that liquidating investment portfolios can have long-term detrimental impact. You don't benefit from what happens to the stock market or whatever investment you may have on a go-forward basis. So those are all real conflicts that insurance and financial advisor community have. But what we do know is there's $35 trillion of dormant home equity. And that dormant home equity doesn't do anything for a homeowner other than the fact that if used appropriately, it could improve their lifestyle. So when Dan and I sort of talked about those really big thematic ideas that were out there, we knew that demonstrating to the insurance and financial advisor world that we could help them find the money and we can do it without impacting their compensation. And we could help them serve their client better by tapping into this dormant asset class. Maybe we're onto something. And that in a lot of ways was the catalyst behind the journey that Dan and I started in 23 and 24, where Dan, I won't have the right numbers, but we must have spent time with 20 different carriers, hundreds and hundreds of insurance and financial advisors, of course, asset managers and regulators and everyone under the sun. And it was really very simple. We've got this idea. You can either pay cash to purchase these critically important insurance and investment products. You can liquidate 20, 30% of your investment portfolio. Or here's a novel idea. You could sell 20 or 30% of your house. And that was the resonating comment that we were able to deliver over and over. And the feedback that we heard was nothing short of, well, this could be transformational.
You've spent years building equity in your home. And now it's time to let that equity work for you. The fractional sale of your home equity lets you access the cash you need without taking on additional debt. It is a game-changing tool to help fund retirement, cover healthcare costs, or simply enhance your lifestyle. No monthly payments, no interest, just financial freedom. Turn your biggest asset into your greatest retirement ally through the power of fractional home equity. To learn more about this, go to www.62whoknew.com and check on the CHEIFS link.
Are you turning 65? Well, if so, the most important decision in your life right now is to determine which Medicare plan you need to be on for your unique changes in life. Are you still working? You on your employer's plan? How about being a snowbird? If so, you need to speak to a Medicare consultant who can help you with your needs. I'm Diane Daniels, and I'm the CEO of Medicare Nation. Go to www.62whoknew.com and click on the Medicare Nation tab. I will give you a free consultation to make sure we find the right plan for your unique needs.
I know that a lot of the feedback that I get, and you probably explain it better than I do, is, what did you just say? The fractional what? And you go, no, I know I said it clearly. I'm a public speaker. The fractional sale of equity in your home, or a fractional sale of ownership. What do you mean? And I'm getting this even from CFPs, from certified financial planners. It is a platform or a theory that most people are not used to hearing, in my opinion anyway, because the looks I get, now once I repeat it once or twice and they go, yeah, that makes sense. But my first reaction, or people's first reaction to me, has been, what? What'd you say? Fractional sale what? Do you run into that too, or are you doing it in such big crowds? I do it one-on-one, 1-on-5, 1-on-10, so there's reaction. I know you do it to big crowds sometimes in conventions. Do you ever run across anybody going, what?
Well, yeah, obviously. I mean, we all grew up, own a home, pay your debt down, try to be debt free, but that's, antiquated thinking in our eyes. If you could own your home and enjoy all the home ownership benefits and live in your home and pick and choose the color, and we don't live in your home, and you could literally sell up to 50% of your home, that's pretty powerful, and not have us involved other than just a percentage of ownership in your home. And you're, as the client, are always in control. I mean, there's no term on our product. So if you want to stay in the home to age 150, God bless you, stay in the home. If you want to pay us off after a year or 2 years or 5 years, that's fine. You can move at any time. You can refinance this out at any time. So it's a very elegant product for the consumer with optionality.
Yeah, and the power of which most consumers, and this is a consumer-based show. I know we have a fair amount of financial planners watching, and the show is distributed to huge groups with financial planners, but we are a consumer-facing show. Consumers don't realize the strength of taking six figures, whether it be $100,000 or $200,000 or whatever, in their 40s or 50s, and having a professional financial planner do something with that money that changes their life in their 70s and 80s. And since the number one concern in the nation, number one, number two is death, number one, we know this pitch, Greg, the number one fear of everyone getting older in this nation is outliving their money. This literally being done. And I've always been staggered by that. Our viewers know I'm a spokesman for reverse mortgages. This is not a reverse mortgage. This accomplishes things that reverse mortgages never could. But we keep up with these type of things. And, Craig has heard me say this and has said it himself, I'm sure, many times. For decades, when they used to take polls and surveys of what people in their mid-60s fears were, they would come up with like the top 10 or the top 15 fears of people in their mid-60s. And for almost all of eternity, since they were taking those surveys, the number one fear was death. I'm 62, I'm 65, I'm thinking about my own mortality. Should I be retiring? Social Security, should I take it? Should I defer it? Number one fear for people getting older is death. Doesn't that make sense? Mm-hmm. Until about 9 years ago, when death moved to number two. And all our viewers can Google this. This is not an opinion. Death is now the number two fear in this country to elderly. number one fear is outliving their money, being broke before they die. And that's what gets to me about CHEIFS, that if you can do something with CHEIFS in your 40s or 50s, probably your 60s too, right, Craig, Dan? But man, that 45 to 55 mark, to take 100 or 200,000 out of your house and have a financial planner do something smart with it, oh, you ain't dying broke. You're going to have a good time in your 70s and 80s. I don't know if I'm oversimplifying it, but to me, that's what staggered me the first time you talked to me about CHEIFS.
Mike, we should unpack a little bit of what you just said, because you're striking a chord that is very, very sensitive for a lot of people. So what do we know? We know that the number one fear, pre-retirees, retirees have is outliving their money. So that's one fear. We believe that one of the greatest issues out there is the demographics of this country. There are more and more people retiring and retired, and less workers supporting them. And the result of that, of course, is some of those foundational bedrock benefits like Social Security, Medicaid, are potentially being chipped away. So you've got, on one hand, this issue of, am I going to outlive my assets? And on the other hand, those benefits that you took for granted, well, there's a non-zero chance that they may not all be there over the next 20, 30, 40, 50 years. So now you have two real issues. And of course, and we just saw this over the last 3-4 years, inflation is deadly for someone who is looking to ensure they, A, don't outlive their money, and B, that the benefits that previously they were 100% sure they were going to get, they may not be getting all of them on a go-forward basis. So outliving your money, some of those foundational benefits that we all rely on, and then inflation. You've got this sort of triple whammy of real concerns. Dan and I were talking about this the other day, and we're not investment managers, but I think we can all agree when you're younger, the plan is have more of your investment portfolio in equities and much less in bonds, because you want to get the benefit of, those 11, 12, 13% returns that are associated with the stock market that massively outpace inflation. And as you get older, into your 60s and 70s, that ratio starts to turn. You have a lot more bonds and a lot less equities. But that's a problem if A, you live longer, which is driving the fear of outliving your money. And of course, if inflation continues to be a problem, you can't be in bonds. You have to be in equities. So how does an individual who has an investment portfolio and their advisor deal with this? Well, they have to stay aggressive in terms of how their portfolio is managed through retirement for as long as possible. But you also have to make sure that you've got that bedrock of certainty. And if it's not necessarily the government anymore, well, then you have to look at the $35 trillion of housing that can create that foundation that we all need to ensure that we have the greatest chance of not outliving our money. That's where we think CHEIFS, with advisors having the conversation with their homeowner clients and talking about outliving your money, inflation, being more aggressive with your investment portfolio, and of course, the real fear of the government taking away some of the things that you may have earned. I think, Mike, the word going forward is I need to be self-reliant on my own assets. And there's nothing bigger than $35 trillion of assets out there to be self-reliant on.
You know, yeah, and there's two things that I'm just going to add into that, and then Dan, you take over. Number one, the other variable. Well, it's not a variable. What did you say? It's a non-zero chance, and it's the whole point of 62. Who knew? Lifespans keep getting longer. Every day, every week, every month, science, medical technologies. I mean, I was on the phone with Mutual of Omaha yesterday learning about something that we're going to be bringing to 62. Who knew? I might as well just say it, final expense insurance, because funerals have gotten so long. And their amortization tables, when they sell final expense insurance, as of like a month ago, they go to 115 years old. I went, what? They went, oh, yeah. People that are buying it now, they have a very good shot at 110, 115. 10 years from now, that's going to be a bigger number. And it's funny when you say, and I just saw this, I just made a comment like this on LinkedIn and didn't get very nice response, but such is life. The only thing bigger than $35 trillion in equity, in dormant equity, the only thing bigger in this country is the $36 trillion national debt. I mean, so if you're one of those people out there that are depending on the government to take care of you when you're older, yeah, that ain't gonna happen.
So, Michael, let's talk about who the appropriate customer is of Cornerstone. So we don't have any age restrictions. You could be 18 to 80 or 18 to 90 or 18 to 115. Our client profile are individuals that are very top heavy in home equity or home ownership. They own their home outright. Craig talked about $35 trillion of home equity that's tied up or dormant. But believe it or not, 41% of every home in the U.S. right now is debt-free. So that is a massive audience. And typically that audience is 50 and above. You know, they're in the stages of retirement, pre-retirement, post-retirement, and they're really obviously doing planning and gifting. So that's our customer. We can go behind a first mortgage, providing that first mortgage is relatively low. And believe it or not, we do have some sellers that are using our proceeds to debt consolidation, to pay off that first mortgage and then use the balance of the proceeds for a guaranteed lifetime income opportunity or a long-term care opportunity or fund grandchildren's 529 plans. So there's all types of opportunities. It's the first time ever we're literally paying individuals to stay in their home. Did you hear what I said? We're paying individuals through a chief to stay in their home.
Which is, yeah.
It's powerful.
Very.
So I've always said, you know, the first advisor that goes to the villages down in Florida, not too far from you, and does a series of seminars and says, hey, there's a new chief in town. And again, we spell chief the right way, CHEIFS. The first chief, you know, that gets down to the villages and talks about rewarding those homeowners with proceeds to improve their lifestyle and allowing them to age in place and stay in their home is a game changer. It's a massive, massive opportunity. And that's just the villages. That's one example of thousands.
Yeah. And the other thing that also staggers me is that most of this equity, not to insult the public, I'm not meaning that at all. They were smart enough to buy homes. And we live in a great country. But inflation caused most of that $35 trillion. They didn't work hard for it. They didn't they didn't risk much. I mean, two of my best friends, bought a house in Sarasota on the beach, I'd say 19 years ago. They paid $465,000 for it. It was a beautiful home. Today it's worth $3.6 million. Okay.
Well, you mentioned that home on the beach. We obviously are after owner-occupied homes. We can do a second home, third home, fourth home, fifth home. So
that's amazing to me also that you can do vacation homes.
Yes. So that's actually a bigger part of our business is the secondary home versus the primary. Because
I didn't realize that.
Yeah, because typically there's beneficiaries involved and there may be 2 or 3 children, and it's difficult for 2 to 3 children to share a second home if they care and want the home. So what we're finding these planners are doing is they're taking it cheap. They're buying a very large life insurance policy in trust to eventually pay us back and equalize the beneficiaries, the brothers and sisters, the siblings. So one can choose to stay in the home and others get paid out in cash through the insurance proceeds. So there's all types of interesting strategies that the advisor population has brought to our attention.
Oh, I bet. I mean, the opening of the door of gifting funds to your children and grandchildren before you're dead, to see them enjoy it, to have the quality of life with them through CHEIFS is another staggering thing to me.
It really
just
is.
staggering.
And there's another novel concept out there. Believe it or not, it's not so novel. Forward inheritance. The second generation is, believe it or not, waiting for mom and dad, to receive an inheritance. Well, here's a really elegant way in a non-disruptive portfolio, AUM portfolio, to mom and dad can literally sell a percentage of their home, give it to the second generation in the form of a forward inheritance. And their AUM and their portfolio and their checkbook is still intact. Powerful stuff.
Planning for retirement? Your home can be your greatest financial resource. At 62whoknew.com, our mortgage link connects you to expert guidance on reverse mortgages, refinances, traditional home loans, all designed with retirement in mind. Whether you want to eliminate your mortgage payment, do debt consolidation loans, or downsize with confidence, we help you choose the right mortgage for your future. Visit the mortgage link at 62whoknew.com because the right mortgage strategy today can mean a more secure tomorrow. What's the biggest threat to your retirement savings? It's not the stock market. It's the cost of long-term care. Home care, assisted living, or nursing facilities can drain your life savings in just a few short years. That's why long-term care insurance isn't a luxury. It's a necessity. It protects your assets, preserves your independence, and gives your family peace of mind. Don't leave your future to chance. Plan ahead. Protect what you've worked a lifetime to build with long-term care insurance. For more information, go to www.62whoknew.com and click on the long-term care insurance link. I think we need to make T-shirts that say, I want a forward inheritance. We
Isn't that
might
great?
sell so many T-shirts. I won't have to do this. You won't have to do CHEIFS. I want my forward inheritance now.
That would be great.
Anthony, I can see us selling 10 million of those T-shirts overnight.
That's
I
a
love
brand new podcast. Just that alone, 62 forward inheritance.
If you haven't copyrighted it forward inheritance yet, I'm doing it when I get back to the office.
Yeah, try it.
We've been on many presentations together because you're the best technicians at this there are. And we were on a call, about 10 days or 2 weeks ago, where you gave an actual example. It wasn't a fictitious, well, you could take this money and do this, and maybe you could do this. This was an actual sale of somebody that sold a fractional part of their equity. They got 6 figures. They used that 6 figures to purchase an annuity. The person on the phone said, okay, how much do they have to pay back? Because that's always the magic question. You told them how much they had to pay back. I think it was 15 years. I'm not sure. The person on the Zoom went, oh, wow, that's a lot. And then you went, but let's look at what we created with the money we gave them 15 years earlier. And suddenly that person that made a little face on the payback was, okay, I'm in love. What do I do next? How do I get this to my clients? And I'd love you or Craig to go over a scenario like that or that exact scenario. Obviously, you can't give personal information, but I want our audience to know this was a real transaction. They created this for a person.
So I'll actually roll through this, Craig, if you don't mind, because I'm actually...
Go for it, Dan.
Yeah, I'm actually looking at it right in front of me. So this is a 45-year-old female that had $1 million home, 0 leverage on it. She sold literally 10% of her home and freed up $100,000 at the age of 45. She took that $100,000 and she gave it to an insurance carrier. This insurance carrier happened to be Allianz, which is a large life insurance company that specializes in indexed annuities. The way this product worked is she dropped $100,000 in and she let the proceeds roll up, accumulate. And at age 75, 25 years later, she hit the guaranteed lifetime income trigger, which generates $205,000 of guaranteed lifetime. So again, I'll say that again. She dropped in $100,000, and keep in mind, that $100,000 didn't come out of her portfolio. She sold literally a percentage of her home and happened to be 10% of her home at that time. gave that check to her advisor. The advisor recommended the Allianz contract. 25 years later, 205,000 of guaranteed lifetime income. The payoff, if she chooses to pay the chief off in 25 years, and we're assuming a 3% compounded home appreciation. So 3% compounded home appreciation based on that $100,000 check, the payoff in 25 years is $485,000. But here's what's neat about this, and this is what's caught your attention, Michael, being a mortgage professional. Michael, what's the cost to finance a $485,000 mortgage today, roughly on a monthly basis?
Oh, seven. I mean, if you have an 800 credit score, we're in the low to mid sevens, and your mortgage payment on 485,000 is going to be $3,000 a month.
Okay, so that's $36,000 a year. Keep in mind, she has $205,000 of guaranteed income. So if she chooses to pay us off or to finance us off, and again, she can do this at any time, she goes to the bank with her guaranteed lifetime income and demonstrates she's got guaranteed income of $205,000. The bank gives her the mortgage. She strokes $3,000 a month or $36,000 a year, and she still has $170,000 of guaranteed lifetime income and her home, 100% of her home.
Well, again, no matter how you look at that, even if they never go finance it, they never pay the $3,000 a month, she's going to have to live for less than 2.5 years to break even. And then from there to 100 years old, she's $205,000 a year ahead.
Right, but
It's just absurd.
right, but what I didn't mention is that $100,000 check she never wrote. It's still in her portfolio, and we assume it's earning 7%. Okay, so $100,000 at 7% in 25 years, that pot of gold is $550,000. Okay, that pot of gold alone is more than enough to pay off the chief's obligation at a 3% compound home appreciation year over year. And then she still has her $205,000 of guaranteed lifetime income. So the math works.
Yeah, the math more than works. And that, what you just said, that last segment, that's what should be having certified financial planners or all financial advisors really just going, what? You didn't touch our AUM, which for our consumers is assets under management. They didn't lose any money for 15 years. Again, the financial planner didn't lose any potential income by depleting his AUM or the customer's AUM. And the customer's almost $250,000 a year ahead. This is the classic win-win situation. And since I do look at things a little differently from the masses, you guys are used to dealing with wealthy people. I mean, you are. I'm used to dealing with a lot of reverse mortgage people who need the money really bad. Okay, and there's a difference. I look at that client, like you just did, that possibly bought that house 15 years ago for $400,000 or $500,000. It's now worth $1 million. She's a single mom, or they're married with 3 kids. They might have a little 401k. They might have some IRAs. They've never seen a 6-figure bank account in their life. And you just allowed them to build a guaranteed income with lifetime income annuity that they never would have been able to do without them. So as much as I love that $1 million person that makes the choice of, I'm going to do it this way rather than taking it out of my portfolio, I see this, and I know I look at it different. For the masses to go, portfolio, I'm lucky I'm getting to the paycheck. I'm lucky I'm getting to the end of the month and making my mortgage payment. But I have $800,000 in equity. Mm-hmm. To me, mass America should be looking at CHEIFS like the popcorn machine in the movie theater. This can take mass America and set them up. They could take away that fear of dying broke. Because what if that person did do $200,000 on their $1 million house? Oh my God!
That's $410,000 of guaranteed lifetime
Yeah,
income.
and you know you gave that quote of, I think you said 41%, which is staggering. When I went in the mortgage business in the 19th century, only about 6% of homes in this country were free and clear. Mm-hmm. Now 41% are. It's just staggering what that 41% could do with their equity. It's a world changer.
It really is. As I said, we found many applications. Also, Michael, we're talking about newly originated product. A lot of the wealth advisor audience is using Chiefs for Inforce Financing, where if there is a LTC policy, a long-term care policy, or a life insurance policy that's in force, and there's an AUM opportunity or drain, and the tax consequences are heavy. We're finding advisors suggest and recommend sell 2-3% of your home to fund those critically important in-force policies that are already in force. Versus,
You don't want to lose them.
you not only don't want to lose them, but it also allows opportunity costs. It allows that investment portfolio to continue to chug along at 10, 12, 13%, or 24% like the S&P 500 did last year.
Mm-hmm.
That's pretty powerful. Your home didn't appreciate 24% last year.
No. No, it's, and of course, there's another total topic, which is a different topic. The three of us has discussed it a little, but something that I'm so excited about and so proud about that 62 Who Knew has signed ReMax as a national sponsor. And by the beginning of September, we will be offering full real estate services, not only in America, but in the 110 countries that ReMax serves. And everybody knows who ReMax is. The red and white balloon is one of the most recognized logos, on the planet. 11 years in a row, ReMax has been voted the most trusted real estate company in the country. We're very excited about this because people will be able to go on to 62 Who Knew, click the red and white balloon, and if they want to get away from the fires in California and move to Florida, or if they want to get away from the prisons in New Jersey where you are and move to California or Pennsylvania or wherever they want to go, they're going to be able to go to 62 Who Knew, click, get the best ReMax agent in their state, in their zip code, in their neighborhood for selling, and already be hooked up with the best buying agent for wherever they're going. But that is another whole ball of wax for Chiefs. So when somebody says to their financial planner, yeah, I'm going to go down, I'll use Florida because I'm here and it's the retirement capital of the world. Yeah, I'm going to move to Florida and I'm going to buy $1 million house. Well, why are you going to buy $1 million house? Because I'm making $1 million on the house that I'm selling in Michigan or New Jersey or Pennsylvania. And this is a financial planner that has been trained in Chiefs.
Mm-hmm.
Correct me if I'm wrong. They can buy that $1 million house, put up $800,000. You'll buy the other 20% of the house for $200,000. They now have an extra $200,000 for that financial planner to work with to make sure that they don't die broke. Did I say that right?
You did. You said it right, and we're actually seeing those transactions. Yes.
That is,
Yes.
as Craig and I know, the purchase reverse mortgage, was an ultimate failure. I am one of those people that say that the purchase reverse mortgage did not fail the industry. The industry failed the product. It's a great product, but it's less than 4% of the reverse mortgage world. And the truth is, it's just a little bit of a too complicated product for real estate agents. Boy, did I just piss off a lot of real estate agents that are watching. But it just is, and it was, and it still is. But financial planners would get this. And people buying 7-figure homes, which I'm sure there are more of than there ever has been in the country, their financial planner will see the strength of owning 80 or 90% or 50% of their next house and taking the rest of the money and setting that family up for life. I mean, again, the possible effects on the real estate community also are just almost unthinkable.
We agree. So it sounds like, Michael, you've been a pretty good student of Chiefs. It sounds like you're ready to be a Chiefs customer.
I should be, except I'm going to have to buy 20% of the house and you're going to have to buy 80. So
Okay.
in my case, we're going to have to reverse it. And
Okay.
Anthony needs a house too. So,
Got it.
yeah, but that's just the truth.
You can't handle the truth.
Okay, I had to do that once. I'm sorry.
I love it. I love it.
Well, we're ahead of schedule. I don't know if you guys want to mention anything else, where you're going to be. I know it's a closed meeting because I'm not allowed there, that you're doing, but talk about the press release that you just did. Talk about what's probably going to happen in November. I mean, Chiefs is, I mean, you're a young company. I mean, this is absurd.
Yeah.
But you talk about the national press release, talk about all the places you'll be speaking in the next few months.
So I'll
Because
start,
again,
Craig. Yeah, so thank you, Michael, for teeing that up. So we fortunate enough to had a series of articles appear in publications, one being Kiplinger's. Craig authored that article a couple months ago. I think it hit the press July 1st. We're in the process of a secondary article on how to use Chiefs or what we see in the marketplace of where Chiefs is being used. What Michael's referring to is yesterday we issued a press release in conjunction with an organization or a company called Insmark. Insmark is a financial software tool that does benchmarking for the insurance audience, the advisor populations, and CPAs and attorneys also have access to this tool. And basically, it's the first time ever a non-debt instrument is introduced into a compare and contrast software, multi-carrier software product, where now advisors will have the ability to see the power of a Chiefs transaction versus qualified proceeds or non-qualified proceeds, or with the ramifications of liquidating an investment portfolio versus the positive ramifications of selling fractional ownership in your home. So that's kind of a big game changer, especially in the advisor population. And there's more. There's going to be additional opportunity coming down the pike in the next few months. Other organizations are going to start to introduce Chiefs funding in their multi-carrier tools, software tools. So we were asked to attend LIMRA, which is a large life insurance carrier, non-for-profit association meeting on Sunday to present Chiefs to a committee that is made up of advanced sales attorneys on behalf of 35 prominent life insurance companies. So we are delighted, we're honored, and we're going to be in Florida on Sunday at 6 o'clock to present to that committee. So we're very anxious to get to Florida.
absolutely.
Thank you,
And
Michael.
we got a little break here today. It's not 98 degrees, it's 92.
Good for
So,
you.
I mean, literally, and it's a nice break. You can feel the difference. We have had record-breaking heat for about 2 weeks, where the heat index was 110
Oh,
for about 2 weeks. Just absurd, absolutely absurd. Craig, what do you got to say before we shove off?
Mike, I think when you go back in your career, portion of my career, you think about how important it is to help older adult homeowners. It's a very broad phrase, tens of millions of them. And ultimately, you want to provide them with the products and services and solutions that will improve their lifestyle, that will help them ultimately achieve their goals, whatever their goals are. You talked before, Mike, about the fact that the purchase reverse mortgage product has not succeeded. It's failed. We know what's happened in the reverse mortgage industry more broadly. There hasn't been growth since the peak back in 2008, 2009. In fact, you described it well. And I think sometimes you have to ask yourself what's wrong. And ultimately, it just comes down to, while we know older adult homeowners will access home equity in order to generate those income benefits, those health benefits that will help them more successfully age in place, there are just certain types of products that they just don't want to entertain.
Yeah.
Debt, reverse mortgages, we know the story. So sometimes you have to come up with the products that people want. And when you have a conversation with an advisor and that advisor's client, and you ask them the following question: how comfortable do you feel selling your $1 million house and downsizing to a $500,000 house and using that $500,000 that you just monetized to improve your retirement outcomes going forward, buying annuities, buying long-term care, whatever it is? And the answer is very comfortable. So you think about that for a second and you say, okay, so they're comfortable selling their home equity to buy the kind of critically important retirement-oriented insurance and investment products that will help them achieve their goals. Well, is there any difference than staying in that $1 million house, selling 30% of it, and doing the exact same thing? And when it's positioned that way, I think advisors and their clients get the joke.
Yeah.
There are better ways to access the largest asset we have to improve my outcomes without taking on obligations. And obligations are, of course, debt and other debt-like products. So, thank God, Dan and I decided to spend a lot of time thinking about, what advisors want, what their clients want, the products that are in the marketplace, distribution that's in the marketplace. But ultimately, it just comes down to really understanding your customer.
Yeah.
And when you really understand your customer, and let's face it, insurance and financial advisors understand their customer. They've got decades of trust with their customers. Now we can all help them serve their clients better. And if we're successful in doing that, we've obviously succeeded.
Absolutely. And two words that Dan used 2 or 3 times, but in the middle of a sentence. So I just want to stress it before we go off the air. CHEIFS is a non-debt product.
Mm-hmm.
It is a non-debt product. You are being handed a 6-figure check. My God, I'm sure you would you do $1 million on a $3 million house? It could be a 7-figure check.
We have.
Okay, so you're being handed a 6 or a 7-figure check. There's no related debt service. There's not a payment next month. There's not a balloon in 3 years. It's. I know I keep saying the same thing, but it's a life changer. It is an absolute life changer / market disruptor when it comes to financial planning, and probably at a time in this country where it has never been able to. Well, is needed it the most. I can't think at my ripe old age, at least in my lifetime, of a time that there are more people in their 40s and 50s right now going, what the hell am I going to do to make it the next 30, 40 years? And there's got to be more people asking that question. But I bought my house 12 years ago, and I have $700,000 in equity. Well, if you don't do anything with it, sounds good. But that's about all it does, is sound good. It's time to do something with it. As always, just appreciate the hell out of both of you being here, being a sponsor. Look forward to doing a lot more things with you. I'm looking forward, although I do speaking on CHEIFS on my local level and on LinkedIn. We're going to be discussing some things next week to maybe be doing some national things, that discussions with your marketing person. Because I think it's the key to everything that 62 Who Knew has been created for. Long-term care insurance, life insurance, annuities, real estate, everything that we want to give to people preparing for retirement. CHEIFS can make that easier and better. It fits. So thank you both for being here as always. And you'll be back, I'm sure, in the next 3-4 weeks. And good luck next week in Florida. So
Thank
close, yet so far. Here I am. But your next trip to Florida, I got a couple of big financial planners that want to meet you.
Love to. Appreciate
Mike, thank you as always.
All right. And next week, everybody be prepared. Next week, our guest is Mr. Tunde Organa, which is he's a nationally known ex-NBA player. Some of you might recognize his name, but a nationally known certified financial planner. And we are not only going to talk about CHEIFS because he has a meeting with you before that, but we're going to talk about the trends and the fears of people right now. He's been doing this for many, many years. And remember, everybody always remember the 3 words that will solve all the problems in your life. And those 3 words are, buy my book. Go to Amazon and buy a gift from and the crowd goes wild. Thank you from the producer. It's called A Gift from My Father. It has nothing to do with financials whatsoever. It is just about the greatness of the greatest generation. Thank you both again, and thank you everybody for watching. We'll see you next week.